Shane, how are you reading this decision? Obviously, it is very much expected, but the commentaries that we're getting, are you seeing any hawkishness?
Well, there is hawkishness in there, but I think it's a bit more balanced out this time. I've only skimmed through the statement. They've reiterated they're not ruling anything in or out, which is what they've said following the last 2 or 3 meetings, so no great surprises there. They're telling us that inflation is still too high, that demand is still strong in the Australian economy, but there seems to be a little bit more around the uncertainties out there, which suggests to me that it's probably a little bit more balanced than the initial market interpretation has been. Just prior to this decision, the Aussie dollar was a bit below 65 cents. Now it's a bit above, so the market's interpreted as hawkish. I think the reason the market's seeing it that way is that, as far as I can tell, there's not a lot of reference to the recent turmoil we've seen in share markets and investment markets generally, and the increasing concerns about recession in the US, or if those things are an issue, the Reserve Bank at the present is downplaying them to some degree. But I guess there is a press conference in an hour's time that will tell us a couple of key things. One, whether the Reserve Bank also considered a hike at this meeting, and maybe also whether they considered a cut. If they've just considered a hike and then left rates on hold, then you can say, well, it's still a hawkish hold. They're still more likely to hike than cut. But I guess the other aspect will be what the governor will say in relation to recent volatility in markets, recent falls in shares, worries about the US and so on. So to me, it's neutral. My own view hasn't changed. I think rates have peaked and the next move will be a cut.
Yeah, and of course, inflation is really the big factor that's holding them back here. And RBA saying that they are expecting slightly slower return to inflation target than previously expected. So there we go. If you're looking for a hawkish line, there is that. I do want to ask you, Shane, while we have you, we've got the Fed going for a dovish hold last week, and then BOE cutting rates, and then BOJ going for a hawkish hike, and then just freaking out everyone in the markets. How does that dynamic affect central banks like the Reserve Bank of Australia?
Well, I guess the signal for the Reserve Bank is that it's an uncertain world out there. You've got one significant central bank still hiking and lots of others getting more dovish. I think Japan is certainly the odd one out, and it turned out that their hawkish pivot, if you want to put it that way, occurred just at the time when share markets were starting to get the jitters about economic growth, particularly in the US. The pivot occurred on Wednesday. Initially, the market didn't pay too much attention to it. But of course, as share markets started to fall, investors then said, well, we've borrowed all this cheap money out of Japan at zero or near zero interest rates. We've got it in these other markets, which are highly risky. And so it turned out that the BOJ's hawkishness had the effect of just causing people to unwind their so-called yen carry trades and take the money out of overseas assets and put it back into Japan, pushing up the value of the yen in the process. And of course, none of that went down too well with the Japanese share market. So I think it is a messy world out there. I think what's coming out of the US is relevant for the Reserve Bank. We're about 3 to 6 months behind the US. So we can't ignore what's happening in the US, increasing signs of weakness in the US jobs market. And I think that will be a feature in Australia over the next 3 to 6 months. You know, we will be impacted by this, not just by sentiment and share market falls, but also in terms of the reality that our economy is running about 3 to 6 months behind theirs.